We'll just take a quick look at a couple of sectors, some of the weaker ones and some of the stronger ones. And our play from last week is essentially, we know that the earnings from the big banks come out on Friday the 13th. So we can pretty much trade long up into that sort of space, but we'll have to continue to check as we go. The other reason for the markets to move up is inflation is showing a little bit of weakness there, but for us it was pretty much buy the rumor, sell the fact on the earnings. This is one of the weaker sectors here, of course, and this is one of the reasons why we're holding a bearish count as well, because this particular finance sector here, the XLF here, we can see that we've got this move up here in 3 waves. So technically we should be taking the bottom out through here. Now we could say that this is wave 1 with an A and a B and a C wave down here with one more little low to come in, and that's possible. But when we look at BAC, the Bank of America, that has already taken the low out through here. So it is suggesting that there is more downside. This current rally that we're seeing across the markets, as it's moving up here, it's moving up. It's quite a lot of volume, but each week it's been lower volume moving to the upside. So we're holding a bearish count partly because of the banks. We can see that they need to make a new low. At the same time, we know there's some really strong sectors. The technology sector is very strong, which is probably the strongest, followed by the industrial sector as well. So looking at, I won't look at the energies, we'll just have a look at the SPY here though for a moment. We can see the SPY, it's obviously carrying the banks as well, but the banks are rallying at the moment. But we just see that as a corrective move to the upside. With the S&P here, the NASDAQ has already taken the top out here. So it's likely that we will need to look at this in the same but different, some sort of little ABC to this point here, to the, say, 4,430 for the SPY, 4,300 for the SP500, and the idea would be looking for 5 waves up here, like we're counting up with the technology stocks. So with the technology stocks here, the XLK here, you can see that it's been one of the strongest, but still moving up on that lower volume over the last couple of weeks. So we'll keep a bit of an eye on that. There's a couple of different ways to count this as a corrective wave to the a corrective move to the upside. So we'll be taking a closer look at that as well. And then we've got the industrials that are quite strong as well here. And it's very easy to have a bullish count on this here with basically the A, the B and the C to here. And then from this point here, the wave 1 here and a wave 2 at this point, 3, 4, 5, going to the upside. We'll need to drop that back into at least an intermediate size there. But quite easy to have this here. It's quite interesting on the actual Dow Jones itself here. These tops were never created here, so it's got a slightly different count. And when you have a look at the, well, this is a bit more, yeah, this is a bit more like yeah, not to worry too much about that, but we'll have a look at the Dow Jones and we'll count the Dow Jones in terms of wave 1 and wave 2 here as well. But this sector made new highs through here, which makes it a little bit different. All the same though, quite strong, but once again up on lower volume, so they'll come up to the hit supply up top here and then sort of pull back. So we've got weak sectors, we've got strong sectors, and what we're taking from the strong sector, from the tech sector here, is that when we look at Amazon and Apple and Nvidia and so on and so on, what we have been doing is counting 5 waves from this particular low here. So this is what we really need to do with these markets as well, to count 5 waves. Now, when those 5 waves are finished, in a bit of a nutshell, coming up here, wherever they come to, when they finish at that point, then anything above that then will be forced to be bullish at that point. Now we can be bullish already, but we wanted to wait to see what earnings are going to, the earnings season, what they're going to deliver on Friday the 13th. So not this week, the following week. So we'd probably be edging higher at that point, like I said, we're moving up on lower volume, so lower volume last week, so it made it look bullish, but the price action is not being confirmed by the volume. So that's an important point. That's sort of telling me that the wind is silent, but the retailers are making a move, but the commercials are not making a move in this. So we'll see what the volume is like through the week and into the end of the week. And if it's on lower volume still, well, then we know that that's divergence happening, the price moving up and the volume diminishing, and then we know that it won't go far at that point in time. So we can look at the markets being starting with the SP 500 here, just on the 20,000 tick chart here. The low is over here. We can call that wave C low in here. The bullish count's always been wave 1 and 2 here, and then wave 1 and 2 here. It's quite a big wave 2 for for a wave 1 for this, so it's a little bit, it's carrying a bit of weight there. It's not the best looking impulse structure that I've seen, but it really hasn't broken any rules either, so we can still keep it in play. So then we would need to look at this as being an impulsive wave to the upside. But I'm more interested in, I know that last week as I mentioned, we will expect the market to move up higher. And look, the S&P may not break the top here, but the NASDAQ has. But as I mentioned, we knew the market was moving up because of all the tech stocks. We could see that count very clearly. And as it's moving up, the point was that even though it's moving up and it'll feel like a bullish market, we need to tread very carefully and not get lost in that it's going to go to the moon and all the rest of it. So it is moving up. As I mentioned, all this moved up here, but it moved up on lower volume. So we do need to be careful. The volume's not confirming the price action at this point. So we're just going to keep edging ourselves high. I won't bring in Apple and the video because I've just put them in the video. It was this morning's video anyway, and you know where the count is on that. So this is the bullish count here. So the bearish count for this, I think I need to go to the weekly chart here and just rearrange a few things here. So with the S&P here, this is how we've had it here. And that could still be the case. We just keep a bit of an eye on that. But what we're going to do is we're going to look at this slightly differently here. We're going to put this wave C over here, because this count would be, this 1 and 2 we had before would be fine, but as soon as it took out this top here, it would be invalidated. And before it takes that top out, or if it takes that out, and before it takes it out, I don't want you thinking that it's going to go to the moon, because the volume is not confirming the price action here. So we could just take that out here, and then we could turn lower at that point. So we do need to be a little bit mindful of this. But the good news is that there will come a point where we can be bullish, but we need to, once this 5 waves up here completes, anything above that 5 waves, wherever that is, then probably the 4-3 actually. So I could just put that 4,300 in there. So that's probably pretty close to, if it was going to breach that top, that's what we'd be looking at that point. So yeah, and the banks have still got one more leg to rally up as well, BAC that we follow, and all of that. I've just got BAC here. So even this is just from the current low here, the A wave, the B wave. So we're tracking these 5 waves up, so nothing's changed. So this would be the same as Apple with its moves to the upside. So they'll all top and turn roughly the same. So that will be, and the same here as well. So it just depends if it got the wind in the sails or not. So if it does break a new high here, it's not really, anyway, that's the story. So that said, I'll just go to looking at the bearish side of it, and it doesn't really matter. We can look at the move to the upside here. So this would be the S&P here. So it's got a fair way to climb, but we still got to the, it could collapse at any time, right? But we still know that the tech stocks are leading higher. So this is not going to collapse without the tech stocks topping. That's my take on the situation. So yeah, this is it. We can climb up here. We can just nip these highs out here. We may or may not do that. There's different counts for it. Probably the max will go up will be the 4.3, but it's a long way to go for such a sluggish thing. But we have to remember that that the S&P was being weighed down by the banks, but now the banks are going to be rallying, so in a corrective manner. So yeah, it'll have the tech stocks and the banks. So this is the case for this little area here. So we'll continue to see that to the upside. So the story is the same as last week. We just stay long, and yeah, so that's sort of where we are now on the 1000 ticks here, just cutting right through to the smaller pattern here. Let me just get, is that enough? Yeah, so from this B wave here, we can look at it as 1 and 2 there. Now you probably start throwing stuff at me in that regard, but when you kind of consider, let's just consider something for a moment. This is the NASDAQ. So this NASDAQ picture here has got a beautiful 1, 2, 3, 4, 5 here. Right, so it's got a nice impulse wave to this particular point here. So that can be this all of this as well at that point. Oh, is that right? No, that's not right, is it? Let me just double check that again. That's on the 14th. Yeah, that's right, from the 14th here. So even though it doesn't look like 5 waves, the NASDAQ is showing it really as nice 5 waves. I see this a lot you don't see much of it in the US, but you see a lot of it in Australia, because in Australia, we've just got, it's either mining or housing finance. It's just those two sectors. So what I see with our index, I see that the mining side and the banking side when they're moving together, then our market will run, have the wind in the sails and it run really nicely like this, and you'll get a nice count. But when we've got the mining going one way and finance going the other, then we end up with patterns like this. And so I know that I need to be a little bit philosophical about them in that regard, but I know that folks will throw stuff at me for that. But all I'm going to do is just continue on my merry way, and I'm just going to continue to count this up here. We need to count 5 waves up here. That's what we need to do. Now we're at 4,100 at the moment, so the number 1 is the strongest number in the market. So even though we're in a third of a third here, we still should see some sort of little dance across here. So from this wave 1 to 2, 1 and 2, 1 and 2, 1 and 2, 1 and 2, 3, 4, and we're going into 4s and 5s here. So that will these 4s and 5s will coincide with the lower volume to the upside, and the retailers being mainly involved with this, because we're not seeing it in the volume for on the commercial side. Okay, so that's where that is. So yeah, if you know the trading levels and you know the patterns that occur at the levels, then you'll know what to do through that space. Now we go over to the NASDAQ, and with the NASDAQ here, what we've got is we've got this particular move here as a corrective pattern. We've taken out the top here. Right, so we know this is corrective at this point, and like I just showed on, this is the CFD product here, so the futures will be the same. So this particular move up through here can be counted in a few different ways, but as I just mentioned on the NDX here, it's 1, 2, 3, 4, 5 for 1 and 2, nice third wave, 4th and 5th ABC pattern here, and now we're working the next one up here. So we're working 1 and 2 and 3, 4, 5 up here. We can just look at those in different light there. But so really we're kind of got, when they do those earnings around the 13th or whatever it is. I mean, obviously we will probably get to here before the 13th, but we'll never know. We'll just see how it all sort of goes, but as I mentioned before, there will be folks that have a good some of these Chinese walls in some of these brokeraging companies will understand what earnings are going to be, and we'll start to see that come in. So if we start to see the market really start fading before those dates, then we'll know what's what at that point, We'll know that those commercials are shorting at that point. But otherwise, yeah, we just keep moving up with this here. So we've got a nice 5 waves here. If we get 5 waves here, that means we'll get another 5 waves over here. Because this is corrective here, then we need to look for 5 waves to the upside here. So we could be pulled back to the 13 a bit here. So this can be counted up in different ways. We could probably even look at the whole thing up here as wave 1 and wave 2 as a sharp move back here. So just be a little bit mindful about that. I don't have it counted like that, but I know that it could fit like that. So on the 1000 tick chart here, we've got that wave 1 and 2 there. Okay, this is the reason that I got the 5 waves for, because I was just using the things that I know we counted 5 waves to here, then I was counting 1, 2, and so I was counting it here to be sort of finished here. So it is possible to have it as wave 1 here and wave 2 coming back into this space over here, the 50-60%. But I wouldn't hold that too close. If the 200 becomes the support, then we'll continue to the upside. So this will still be 1 and 2 here. Let me just count it the other way around. I probably need to squeeze that in there, but I'll have to go there. So I'll have to put that as 1 and 2 there. So you can forget about most of it. I mean, it's possible to have a top here, right? And it's possible to pull back into this space. So you just need to be aware of that situation. But apart from that, we'll need to look at it as 1 and 2 here and 1 and 2 here, and then going up for this 3rd wave at this point coming in here. So continuing to climb at that point. And yeah, so the next one is the Russell. So with the Russell here, we've got a slightly different situation here, because we can count this down here from wave B up here as this is just the otherwise you have to look at the 2000, but we've got 1, 2, 1, 2, 3, 4, 5 here for the 3rd wave, and then the 4th and the 5th. So it's a pretty good 5 wave structure down here. So the same thing applies here. We just need to look for 5 waves to the upside here. So yeah, so just continuing to the upside here. The 180 will give it a bit of, all these highs here, as I mentioned last week, will give it a bit of grief, and the 180 will, but we should climb up into this box here. But people are not trading this one here, they'll be trading this one. So we can look at this here. This is a different way to count it as well. This is putting wave 1 over here with an A wave here and a B wave here, and then 5 waves up here. So it's just another way to look at it, but it won't make much difference. It'll still be to the upside coming into play here for that. There's an ABC pattern for wave 2. So there's a couple of different ways to count it. We'll have to go to this wave 2 if that's going to be the case. But yeah, anyway, this next level here, the 1800 area here, this is moved up a little bit higher. The IMF, IWM haven't, the ETF hasn't moved up to the 18 just yet, but when it does, you can expect a little bit of a dance across here. So you can also look for, futures traders can look for a classic trading levels pattern across this level here. So yeah, so it's just really arrived here so far. So you'll probably end up seeing, if that's looks like 1, 2, 3, 4, 5 there, 1 and 2, 3, 4, 5. So we'll probably see the first high above the level, and then you'll get your little ABC, and then you'll push up at that point. And the Dow Jones here, yeah, in this case here, it hasn't taken out the top here for this, and this is a CFD product here, so I'll have the futures there. So on the actual on the if I go to the ETF over here, we can see that it's taken the top out here for that. But I still think it makes a nice bullish count actually with wave 1 here, an A wave, a B wave, and a C wave here. We'll just have to see how this goes up through here for this. Yeah, so I kind of see that in a bit more of a bullish light, really. And over here on this particular one here, we can look at it as an A wave here, a B wave on that high, and then 5 waves down here for a bullish move as well. But actually on the Dow Jones index itself, that's the actual high here, this one. So really on the index, you would look at that there, and then this is actually quite a nice wave 1 here. And also on the index as well, this second high here is the high, not this one here. So you can also count this down as 1 and 2. So you can still count it down as 5 as 1 and 2 and 3 and 4 and 5. I know it overlaps here, but it doesn't overlap on the index itself. So there's different ways to view all of this. We're just going to we'll just see how this plays back up here with this. Really, that's all we can do, and just count our 5 waves up. Also too, we can look at this. Yeah, it's a little bit of a tricky, because they're all different, because they're all slightly different. It makes them all a little bit different. So, but I like to take them all on board and be a little bit philosophical about it and find out the situation. So I'll just go to. I don't have it on this one, do I? Okay. Let me just double check. I haven't really updated this one. So let's just go to 20k tick and just check on this. Okay, so yeah, it's still the bullish count on this one, but see, when the Dow Jones close, let's just go to that index for a moment here. Where's the D? Up here, the Dow Jones here. You can see that here the Dow Jones closed down nicely. We can go 1, 2, probably 3, 4, 5 here. It's closed quite nicely here for this. So we can count 5 waves up to this point. We can count this as a B wave back. So we can go an A wave, a B wave, and a C wave up here. So 1 and 2 and building up for a C wave. Or we can go bullish in 1 and 2. It kind of doesn't make any... All I'm showing you this for is it's nice and clean on the DJ here. But when we come to the futures here and the CFDs, it's a little bit, it gets quite messy down here because it's trading in the odd hour and the off hours, you know. So, but at the same time, taking all that on board, we can look at the move to the upside here as wave A here. This is a bit like, you know, the Russell and the MDY, the SP500 and so on as well. They're all sort of carrying the banks at that point. So at that wave 3 up there, we could look at that as a wave C. But in the meantime, this has still got further to go up there. This is the 50%, 61.8%. So it's going to stall here in the 78.6. So it's clearly that this is 1 here and 2 here. We could probably look at this as 1 and 2 and 1 and 2 here. It's a little bit sort of awkward, or all of 1 and 2 and the 3, 4 and 5. Whichever way you want to look at it, it's going to climb higher. It's going to have problems in this little zone here. That little zone coincides with, well, that's the closest largest number, 33,500. So you're going to see a dance across that number there, which is also this old high over here. So you've got the 61.8%, the old high over here, you've got the 500 here. So there's going to be some type of, you know, sort of dance across here before going higher at that point. But the trend to the upside here, all of this is just not finished yet, okay? Wave 4 tends to break the trend line, so just expect that to occur. You know, it doesn't mean that the whole trend is broken down. So yeah, still to the upside here. You can look at it bullish or you can look at it bearish. You choose. All I can do is go to say to myself, okay, we've got wave 1 and 2 here. We'll call this wave 3 when it comes in. If we get wave 4, if we get wave 5 here, well, if we get 5 waves up there, well, then we can look at it as wave 1 and we can look buy the pullback at this point. You know, we don't have that yet, but that's what I'd be looking to turn bullish, because these markets, you know, not so much this one here, but the S&P 400, the Russell, the banks, you know, carrying that bearish pattern that we need to eliminate. We need to sort of, you know, because that's the idea with Elliott, isn't it? It's very discretionary. You can have 2 really good, 3 really good Elliott Wave people, and they still can't decide on account, you know. So I understand the problems with discretionary probabilities. So I try to take all those on board and wingle our way through. But at the end of the day, I try to be practical and say, well, this can be bullish, this can be bearish. If it's going to be bullish, we need to see 5 waves up on some of these weak indices and sectors, and you know, they need to fall in line with the other markets. You know, markets can wander off from each other for a while, but they are herd animals and they will need to come back together. So yeah, that's all. Alrighty, enough waffling. Adios. Cheers.